This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Apple tops targets, but does it have a revolutionary new product in its pipeline that will wow investors and consumers?
Battleground stock Herbalife shares have their best day ever as the market concludes investor Bill Ackman failed to deliver what he called a death blow to the company.
Split decision. Two courts issued different rulings on a central component of the president's health care law, subsidized premiums.
All that and more tonight on Nightly Business Report for Tuesday, July 22nd.
And good evening, everyone. I'm Sue Herrera, filling in this evening for Susie Garrett.
And I'm Tyler Matheson. Welcome, everyone. Stocks rose today. They got a boost from some positive earnings, strong economic data, and easing worries about the global economy and how it might be affected by international conflict. Added up, and it was enough for the S&P 500 to reach a fresh intraday high before pulling back, ending just 2 points away from an historic record close. And after the closing bell, attention turned to the latest quarterly earnings from the tech bellwether and the most valuable publicly traded company on the planet, Apple. Apple made $1.28 a share excluding items, and that topped Wall Street estimates by a nickel. But revenue was slightly lighter than forecast, despite selling 35 million iPhones, 13 million iPads, and nearly 4.5 million Macintosh computers. Shares were volatile in late trading after closing up nearly 1% in the regular session. Julia Borston joins us now from Los Angeles with more on Apple's earnings. Julia, take the numbers apart for us. What did you see?
Well, Tyler, for Apple, it's really all about the number of devices it sold. iPhone sales grew nearly 13% year over year to 35.2 million, showing that Apple is keeping ahead of new rivals and thriving, particularly in Brazil, Russia, India, and China, where CEO Tim Cook says iPhone sales rose in those four countries 55%. But it is a different story for the number of iPads sold. The number of tablets that Apple sold declined more than expected to 13.2 million and is down also from 14.6 million in the year-ago quarter. Growth is expected to continue to struggle this quarter, with the company projecting revenue that's lower than Wall Street expectations. The June quarter is traditionally Apple's quietest ahead of fall product announcements, and now the focus is really turning to what new products Apple has in store, with eager anticipation for new iPhones as well as wearables. Sue, maybe we'll see a watch. Back over to you.
It could be, Julia, and we're going to come back to you in just a moment. So sit tight, stay right there. Meantime, with Apple's solid results out, analysts and investors are now focused on Apple's future and the game-changing products in the pipeline at a time when CEO Tim Cook is firmly putting his own stamp on the new Apple. Josh Lipton has more.
There's a lot of excitement about Apple's next generation of products expected to be in stores this fall. From the iPhone 6 to the Apple iWatch, the company is poised for a big fourth quarter.
We expect the iPhone 6, a 4.7-inch and a 5.5-inch. We'll go to China a lot. I think that's going to be very important in Asia, as well as elsewhere in the world, but especially in Asia and China. And then the iWatch we think is a fall launch. So I think those are two very, very exciting new products.
And as Tim Cook steps outside the shadow of Steve Jobs, he's starting to make Apple his own. Cook has now been at the helm of Apple for nearly 3 years, and insiders are putting his performance in context. The company's income statement is one way. Under his watch, Apple's annual revenue has jumped nearly 60% and its profits by 40%. Apple stock, since August 2011, is up about 75%, besting the S&P 500, though lagging the NASDAQ. But beyond just basic stock performance and financial metrics, Cook is also making changes at Apple that are having a big impact on the company's leadership and culture.
I think he's a little more deliberate. He's a little more data-driven. Steve Jobs is more of a visionary, had a great gut and created a phenomenal company. And now Tim Cook has to carry that on. And what does Tim Cook always say? He says, you know, our North Star is creating great products. He has kept that culture at Apple. And I think that's very, very important. That's the most important thing he could have done, and he's done it well.
Cook is also comfortable welcoming big personalities into the Apple family. Dr. Dre and Jimmy Iovine are now Apple employees after Apple bought Beats for $3 billion. And Angela Ahrendts, former Burberry CEO, now leads the company's retail operations. And Cook is turning old foes into new friends, recently announcing a new partnership with IBM, bringing a suite of business apps to iPhones and iPads. At the end of the day, though, Apple will be judged on whether it continues to make and sell fantastic products. When I speak to Tim Cook, he's clearly excited about the company's product pipeline. We'll soon find out if investors and consumers are equally enthusiastic. Josh Lipton, Nightly Business Report, Cupertino, California.
Well, Apple was not the only tech giant out with earnings this evening. Revenues rose for Microsoft in the fourth quarter, even though profits fell. That was mostly due to costs associated with absorbing Nokia's handset business, which it finally acquired in April. The world's largest software company made 58 cents a share, excluding items. That was a 2-cent miss on the forecast number. Revenue, though, up from a year earlier, topping $23 billion, and that one comfortably beat Wall Street estimates. Shares were little changed in after-hours trading, as you see on that graphic there. Back with us again, Julia Burston in L.A. What's the one key takeaway you see there with Microsoft, Julia?
Well, Tyler, the big news was Microsoft's loss related to its Nokia acquisition that dragged earnings down lower than expected. The company also says its job cuts of up to 18,000 employees that it announced last week, about 14% of its workforce, will result in pre-tax charges of up to $1.6 billion over the next 4 quarters. But CEO Satya Nadella says this is all part of the plan as the company pivots from a focus on software to selling online services, apps, and devices. To that end, Nadella says the company's changes in the wake of the Nokia acquisition, its move to the cloud, is paying off. Nadella saying that commercial cloud revenue is doubling again this year to a $4.4 billion annual run rate. Back over to you, Tyler.
Julia Burston, thank you very much. Sue?
Well, Ty, stocks ended higher today, getting some help from strong earnings, as well as existing home sales rising a better than expected 2.5% in June, and consumer inflation staying in check last month, up just 0.3%. Here's how the major averages looked at the close of trading. The Dow was up 61 points, the Nasdaq up 31, and the S&P added nearly 10, closing just 2 points away from another all-time high.
Well, not all earnings reports delighted investors today. Some mixed numbers from some top commercial brand names are revealing a lot to investors about the changing tastes and resources of U.S. consumers. Sarah Eisen has more.
The big consumer company results say more about the major shift in consumer tastes. According to the CEO of Hain Celestial, the organic food company,
healthy eating is spreading across the world today.
McDonald's, for instance, is hurting as consumers stay away from fast food. Same-store sales falling 1.5% during the quarter in the U.S. and down 3.5% in June alone. Analysts say it says much more about McDonald's losing its touch with its consumer than about the overall economy. McDonald's has been introducing new menu items like egg white McMuffins and snack wraps. But so far, it's not working. What is working? Chipotle. Same-store sales for Chipotle leaping 17% last quarter. And that came even as Chipotle increased its menu prices for the first time in 3 years. The takeaway? Fresh food is in. Chipotle is known for its antibiotic-free meats, organic produce. In other words, it's on trend. Another example of changing consumer attitudes, Coke, missing the mark on sales because in North America and many parts of the world, soda is not growing. Diet consumption is declining. Even juices are seeing slowing growth. Instead, consumers are reaching for sparkling water, away from artificial sweeteners like diet soda. It's caught a lot of the biggest names in the industry off guard.
I look at all these big food companies, where they didn't see the trends moving to, and it's not only natural organic, it's taking sugar out of your product, salt out of the product, no additives, no stabilizers, no emulsifiers.
Campbell's Soup, which is struggling with canned soup sales, is playing catch-up, launching hundreds of new products this week, like V8 protein shakes and protein bars, organic soups, smoothies, fruit and veggie snacks, even Greek-style yogurt, hitting all of the trends. So while the economic environment is still tough, the shift in tastes and perception of what's healthy matters even more and is separating the winners from the losers this earnings season. For Nightly Business Report, I'm Sarah Eisen.
Still ahead, why investor Bill Ackman's much-hyped attack against Herbalife backfired big time today. But first, a look at some of the other big names reporting their earnings today. Shares of Herbalife, the nutritional supplement company, had their best day ever today. Shares shot up more than 25%, and that's despite a billionaire investor promising to deliver a, quote, death blow today in his longtime battle against the company. Trouble is, that didn't happen. Kate Kelly has the story.
Hedge fund manager Bill Ackman took another big swing at Herbalife today and seems to have missed. Investors in the nutrition supplement company, which sells healthy shakes and encourages better diet and fitness, partly through member-organized clubs, sent shares of the stock way up, even as Bill Ackman, who runs the multi-billion-dollar hedge fund Pershing Square Capital Management, described it as a criminal fraud that targets the poor. In a 3.5-hour presentation, Ackman revealed having spent $50 million to probe Herbalife, among other things by hiring a team of researchers to go undercover at Herbalife clubs from Queens, New York to Chile. Their key findings? That a training program used by Herbalife has targeted low-income people, many of them in the Latino community, and that it costs participants an average of $3,000 before they become bona fide product sellers, something they achieve through required attendance at club meetings and forced purchases of products they may or may not want to consume.
When you run out of countries, you got to have new methods. And you got to go deeper and deeper. And when you run out of middle-class people, you have to go after people who make $2 a day, because there's $13 trillion of revenue there.
But the presentation even seemed to have the opposite of its intended effect, driving the stock to a 6-year high. The reason? Investors were expecting an even bigger and perhaps less nuanced revelation. The day was certainly a win for Herbalife, whose chief financial officer said in an earlier interview that Ackman misunderstood their nutrition clubs.
I'm not worried about the substance of what he has. There's no doubt that he's missing the real analysis, the real research. This is anecdotal. It's very propaganda-based. I'm not even sure he completely understands clubs, but we'll listen. What he's missing is that fundamentally, we've got millions of customers that enjoy the product, that use the product. That's indisputable.
Either way, the nutrition supplement company remains a closely watched market battleground. For Nightly Business Report, I'm Kate Kelly in New York.
Now, a lot of investors may not know it, but there is a good chance that many of them have money invested in Herbalife stock. Here's a list of all the big mutual funds with significant investments in the vitamin supplement company. Virginia College American Fundamental is a state-run 529 college savings mutual fund, and American Funds NVIT is an insurance fund only available through a variable annuity.
But it was also a positive day for shares of Verizon, which ended the session higher. The largest U.S. wireless telecom company reported a nearly 6% rise in quarterly revenue and earnings per share of 91 cents. Well, they topped Wall Street estimates by a penny. But the sector this year has been lagging behind the broader market. Morgan Brennan explains why and whether these stocks are now a good deal for investors.
Despite perceived safety and high-paying dividends, the telecom sector has been underperforming the broader market. So far this year, the sector has gained just 4.5%, while the S&P 500 is up about 7%. Analysts say telecom is trading at its biggest valuation discount to the S&P in more than a decade.
There are a lot of concerns going on with the broader industry with respect to competition, with respect to some of the M&A transactions that are taking place in the marketplace. And so that's adding an additional layer in terms of overall concern that's keeping valuations where they are today relative to the market.
But key trends could make some telecom companies more attractive to investors, and they were apparent in Verizon's earnings. First, the growing popularity of tablets. In Verizon's second quarter, the number of people who signed up for a tablet data plan quadrupled, offsetting declines in smartphone subscriptions, which is a market that's become harder to grow, with 80% of American adults already owning a smartphone. Second, the return of wireline revenue. Although small, Verizon posted its first increase in its landline business in 7 years. Analysts say companies like AT&T, which reports tomorrow, and Frontier Communications could start to see similar results as plain old telephone service is replaced by broadband.
Our overweight names right now are Verizon as well as T-Mobile.
Another area to watch, cell towers. As more carriers promise faster speeds, companies providing the infrastructure could benefit. Names like SBA Communications and American Tower, a stock that hit an all-time high just earlier today. For Nightly Business Report, I'm Morgan Brennan.
Well, if you have a smartphone, you've likely seen a ton of ads on it, and now you should expect to see a whole lot more of them. A new report from eMarketer predicts that revenues from ads running on smartphones and tablets will outstrip those from newspapers, magazines, and radio this year for the first time ever.
And we begin tonight's market focus with earnings from three big Dow components. DuPont kicks it off, saw its shares fall after it gave a weaker than expected forecast as lower sales in its agricultural business weighed on its earnings and revenue. The chemical and agricultural company did increase its quarterly dividend, but that did not impress investors. Shares down a fraction. They finished at $64.95. Travelers' earnings were well below estimates, but its revenue beat forecasts. The insurance company's results were impacted by catastrophe losses that were higher than the prior year because of wind and hailstorms, and that sent shares down almost 4% to $91.63.
Shares of Dow component United Technologies fell because of weak order growth and disappointing margins. Its engine business in particular saw sluggish performance in the quarter. That despite a rise in earnings and news that the company raised the lower end of its 2014 earnings forecast. Still, the shares fell nearly 2% to $110.86. Comcast's second quarter earnings topped estimates as it added more internet customers and it reduced the rate of people disconnecting its video services. The media giant said it saw strong momentum across its cable and content businesses. That sent the shares up 1.5% to $54.63. Comcast is the parent company of CNBC, which produces this program.
The Federal Aviation Administration is telling all U.S. airlines not to fly to Tel Aviv for at least the next 24 hours. This after a rocket launched out of Gaza landed near Ben Gurion Airport earlier today. Germany's Lufthansa and Air France have also suspended flights for Israel for the time being. Before that FAA directive was announced, Delta diverted a plane headed to Tel Aviv with 290 persons aboard. They sent it all the way to Paris to avoid the conflict zone.
So how will the escalating violence in places like Tel Aviv and Ukraine impact the aviation insurance industry? With the loss of Malaysia Airlines Flight 17, many are asking who pays when these acts of aggression happen. Robert Hartwig, president of the Insurance Information Institute, joins us now with some answers. Robert, welcome. It's a pleasure to have you here.
Glad to be here.
Let's start with, are the airlines required to carry insurance against these different types of acts of terrorism or aggression, or to simply just safeguard the fleet?
Absolutely. All commercial aircraft are required to carry insurance. And typically they're going to carry insurance that obviously covers the aircraft itself. They're also going to be required to carry coverage that protects them against liability losses in the event that people are injured or killed in accidents. Those could be accidents that involve a crash on the ground, or they could be the sorts of accidents that we've seen recently, whether it was a MH370 disappearing off the coast of Australia, or most recently and tragically the shooting down of MH17 over the Ukraine.
Would Malaysian Airlines already have been paid for the loss of those two aircraft in the amounts of probably 90 to 100 and some million dollars?
Right. A Boeing 777 is typically insured for hull coverage. In other words, the value of the aircraft itself for about $100 million. They have certainly been paid in the event of the MH370, which disappeared back in March. The most recent event in Ukraine occurred just a few days ago. However, payment has been authorized on the hull of that aircraft. I don't know that the payment has actually been transferred at this point, but it has been authorized.
Now, what about the passengers? Does, say, Malaysia Airlines then pay out per passenger, and does that then preclude lawsuits or not?
There are international agreements that govern how much carriers have to pay in the event an individual is killed in an airline accident to the survivors, to the members of the family. And in this case, it's known as the Montreal Agreement, and that is approximately $175,000 per passenger. So Malaysia will begin these payouts basically very close to immediately to the family members of those who were lost on this flight. Ultimately, the costs, for the most part, are borne by the insurers of the airline, however, and there are a multitude of insurers who would take part in these losses.
Who writes this kind of insurance, and is it likely, in light of these two tragedies, that premiums for this kind of coverage will go up?
Right. Aviation insurance is written in a different way than you and I might insure our cars or our homes, where we take out a policy with an individual insurer. Aircraft, commercial aircraft, are written through consortiums. These are groups of insurers that band together to provide coverage in the event we have losses just like these, which can be very, very expensive, hundreds of millions of dollars, even billions of dollars per event. So they do band together, and they band together for different types of losses, and that's basically how the entire global marketplace works. Now, what will the impact be? We've had an accumulation of events recently. You can go back to the Asiana flight that crashed in San Francisco last year. You can look at the disappearance of Malaysia Flight 370 in March, and of course Malaysia 17 just a few days ago. You combine that with the loss or damage of a number of aircraft in attacks by insurgents in the Tripoli airport in Libya, an attack in Pakistan, and a few other events here and there. And what you have is some pressure on the marketplace. And yes, at the end of the day, losses of this magnitude could in fact impact the cost of aviation insurance on a global scale.
Robert, thank you very much for joining us. We appreciate it. Robert Hartwig.
My pleasure.
And coming up, two conflicting legal rulings on a key provision of the new health care law and what that could mean for millions of Americans. But first, more earnings results from some big corporate names. Take a look.
A huge auto recall to tell you about. Chrysler recalling nearly 800,000 older model Jeep Commanders and Jeep Grand Cherokees over an ignition switch problem where contact between the driver's knee and the ignition key can turn the engine off. The automaker said it's only aware of 100 complaints, one accident, and no injuries related to that problem.
A pair of conflicting federal appeals court rulings today, both over the legality of subsidies given to low and middle class earners living in states on the healthcare.gov insurance marketplace. White House Press Secretary Josh Earnest says no one will lose their subsidy as a result of today's court rulings.
Right now, there are millions of Americans all across the country who are receiving tax credits from the federal government as a result of the Affordable Care Act that is making health care more affordable for them. And while this ruling is interesting to legal theorists, it has no practical impact on their tax credits right now.
And Bertha Coombs joins us now with more on what this means for the Affordable Care. Let's start with what the courts did today.
Okay, the issue here is whether we're talking about the letter of the law or the spirit of the law. So the appeals court in the D.C. district and the D.C. circuit said the letter of the law and the Affordable Care Act says that these federal subsidies can only be awarded to people who buy their ACA plans on state-built exchanges. Now, if you look at a map, that's only about 14 states, the District of Columbia, D.C. The rest of the map are states like Texas, like Florida, like Ohio, which are on the federal exchange, and that's what we're talking about here. Now, you go over next door in Virginia, and the Fourth Circuit Court of Appeals says, nope, the spirit of the law is what's intended here. They, in fact, sort of said it's akin to sort of saying to somebody, hey, get me a pepperoni pizza for lunch. You really don't care whether it's coming from Domino's or Pizza Hut. If you're getting a pepperoni pizza, that's the important thing.
So how does this get resolved? Does the Supreme Court become the final arbiter of this, or do the courts figure it out between the two of them?
It could go to the Supreme Court. The next phase, the Obama administration is now going to appeal to the full D.C. circuit because it was a 2-to-1 decision by just a panel. So now they'll go before 9 judges. If those 9 judges agree with the majority on the panel, then it will likely go to the Supreme Court because you have 2 different circuits disagreeing, and the Supreme Court will need to resolve it. It's not going to happen quickly. A lot of analysts say this is going to take a long time to play out.
And very quickly, if you expect to get or are entitled to a subsidy now, you will get it no matter what. If the Supreme Court ultimately were to side with the District of Columbia Appeals Court, would it gut the law?
It would gut the law in that a person could say, look, I can't afford this coverage without a subsidy. Ultimately, Congress could change the wording of the law itself, but a lot of analysts say, notwithstanding all the political issues, both sides would find that a dangerous issue because it opens everything up.
There's no political appetite for that whatsoever.
Very interesting day. Bertha, thanks very much. Bertha Coombs reporting that. Let's take a look at the shares of some of the biggest health insurers and how they closed today. All of them were higher. Aetna and United Healthcare, each up more than 1%.
And finally tonight, they say that there are 8 million stories in the naked city. And in New York, it turns out 1 in every 25 of them involves a millionaire. A new study by consulting firm Wealth Insight says that about 4% of the Big Apple's residents are worth at least $1 million. And the firm defines a millionaire as someone with net assets of more than $1 million, not including their primary residence. That counts us out, buddy.
That's right. The Big Apple, pretty rich place.
We may be in the
That's
Big Apple, but we're not in that club. That's right. Exactly. All right. That does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll hope to see you back here tomorrow night. I'm Tyler Matheson with a Nightly Business Report news brief. Apple profits beat estimates by a nickel, selling 35 million iPhones and more than 13 million iPads last quarter, many of them in China and other emerging markets. Earnings at Microsoft, though, lower than forecast. Big hit there from its acquisition of the phone maker Nokia. Stocks ended higher today. The Dow was up 61, NASDAQ up 31, and the S&P added nearly 10, just 2 points away from another all-time high. Shares of Herbalife soared 25% after the billionaire activist investor Bill Ackman failed to deliver a promised knockout blow against the company's sales model. The FAA ordered all U.S. carriers to refrain from flying into Israel for at least 24 hours. And tune into Nightly Business Report here on your public television station.